On May 29th, 2023, history was made as President Bola Tinubu was sworn in as Nigeria's elected leader. His victory was predicated on a promise to revive and turn around the fortunes of Africa's largest democracy. To achieve this, he set out 8 presidential priority areas of action. They include economic revitalization and job creation, education and skills development, environment and natural resources, food security and agriculture, healthcare and social welfare, housing and urban development, infrastructure development, security and justice reform. In this edition of PPP Today, we're going to examine the first presidential priority area, economic revitalization and job creation. This is the story of how President Tinubu is working to rewrite Nigeria's economic future. On assuming office, President Bola Tinubu made a seismic move. He removed the fuel subsidy. For decades, this policy drained over 4 trillion naira yearly. The announcement saw petrol prices soar from 185 naira to 500 naira per litre, hitting wallets hard. But the goal was clear: save 1 trillion naira annually, curb corruption and fund infrastructure. It sparked inflation, peaking at 34% in 2024, yet opened doors for private refineries and other business activities in Nigeria's oil and gas industry. Amongst them, the Dangote refinery in Lekki, Lagos, the Port Harcourt refinery in Rivers State, and the Warri refinery in Delta State. President Tinubu unified Nigeria's exchange rate, letting the naira float. However, this policy cleared $5 billion in forex backlogs, cleared a $2.25 billion World Bank loan, and made export competitive. These tough calls set the stage for Nigeria's economic revival.
The past year tested our resolve, but through the economic discipline and strategic reforms, we achieved what many deemed impossible.
What we are hoping to accomplish by this, frankly, is to bring some sanity to an industry that I am sure you will all agree with me has really gone out in a limb and arguably does no longer serve the interests of those who it was meant to protect or reach out to. Too many people had gone into that sector, and really, as at last count, I believe we had over 5,000 bureau d'issuance going on to 6,000, which definitely had different interests depending on where they saw themselves. And don't forget that at some point in time, the bureau d'issuance was used strictly with the intention by many who applied for these licenses to take advantage of the different windows in the foreign exchange market and in the process arbitrage the system on an ongoing basis. Now, we are hoping that by the time this exercise is finished, by the time the guidelines come up, we've proposed that for certain categories of BDCs, which are the categories in a particular location, the share capital, minimum share capital, will be $500 million naira. And for those who choose to work throughout the country, their share capital is proposed at 2 billion naira.
The Nigerian leader formed the Presidential Economic Coordination Council in March 2024. This council brought together ministers, governors, and members of Nigeria's business community. By July, the Economic Stabilization Program kicked in, tackling inflation and boosting jobs. It channeled funds to states, streamlined policies, and drove a projected 3.76% GDP growth in 2024. Despite resistance from some quarters, President Tinubu remained resolute. His coordination was a masterstroke for economic unity.
Our national GDP growth rebounded to 3.86% compared to the last quarter. Revenue increased to 21.6 trillion. Naira rebounded, reflecting our resilience.
We had shown the resilience of the Nigerian financial markets and their depth, their capacity, their increased complexity and sophistication by having a domestic issuance of dollar bonds which attracted Nigerians investors from far and wide as well as others.
President Tinubu realized Nigeria's tax system was in a bad situation, so he introduced sweeping tax reforms via 4 tax bills to simplify taxes and boost revenue.
Nigerian Revenue Service Establishment Bill is going to repeal the Federal Inland Revenue Service Establishment Act and create the Nigerian Revenue Service. What are we trying to do there? The Federal Inland Revenue Service is not the revenue agency of the federal government. The taxes they collect go to federation accounts, so they are the revenue agency of the federation. So their name is not a true representation of their functions. So we say, let's call it Nigerian Revenue Service. Plus, they should administer all the taxes and levies and revenue for the government. We don't want regulators collecting levies and taxes. In the Fiscal Responsibility Act and in the last budget, we had over 60 government agencies at the federal level with revenue targets. No, that cannot be right. If there is tax to be paid, VAT, import duties on an expense or an asset, and you have not paid correctly, or in the case of VAT, it hasn't been charged, you don't need to have paid, but you need to have been charged, you cannot get a tax deduction for that expense. If it's an asset, you cannot get capital allowance for it. So you cannot import stuff and decide not to pay import duties and VAT, and then you go and file returns and you're claiming CIT from the FRS. That will no longer be the case.
By 2024, government income doubled to 9.1 trillion naira, leaning less on oil. States were not left out as their revenue tripled, with more value-added tax based on consumption, empowering local economies. This shift is fueling fiscal freedom, job creation nationwide, and of course, Nigeria's drive towards ensuring fiscal federalism at all levels. With fuel prices high, President Tinubu turned to Nigeria's gas wealth. The Compressed Natural Gas Initiative, launched in 2023, offered CNG at 200 naira per unit, half petrol's cost. Free conversion kits transformed vehicles, slashing transport costs and creating jobs in CNG stations. It has saved foreign exchange and is empowering small businesses, though rural areas await more infrastructure. This is job creation in motion. President Tinubu's economic sustainability plan poured loans and grants into small businesses, which employ 80% of Nigerians, sparking jobs and local production. For federal workers, President Tinubu strengthened the life insurance policy, ensuring families are secure if tragedy strikes, boosting morale and productivity.
Inasmuch as this policy has existed throughout this administration and even previous administrations, we find that not too many people know about the policy. And so we have, from my office, even planned to carry out a sensitization, which will be coming up very soon. But I'm so happy to be given the opportunity today to talk about this policy. And I ask that please, it would be very good to give this wide coverage, because this policy affects every public servant, including most of you seated here.
Meanwhile, local government autonomy has given Nigeria's 774 local government areas direct funds for the first time in decades, igniting grassroots projects. These steps are building a stronger economic foundation. President Tinubu tackled Nigeria's debt, slashing it from $108 billion to $94 billion by 2024, including International Monetary Fund (IMF) repayments. The debt service burden dropped from 97% to 68% of revenue, freeing funds for growth. A $2.25 billion World Bank loan signaled global trust. It's a tightrope, but President Tinubu is keeping Nigeria in the game.
The creativity of Mr. President and his acumen is brought to the fore, where Nigeria is able to exit the $3.4 billion COVID loan fund that was given by the IMF. Of course, I saw some cynicism in some quarters whether this is actually true or not. We can report authoritatively that Nigeria has indeed exited from that debt, and what that means is that we have paid that debt fully. Of course, this was taken during the COVID time before the coming of this administration. But President Bola Ahmed Tinubu, in his usual way, is seeing government as a continuum, and therefore has directed that government will exit that, and government has indeed exited that debt.
From the swearing-in to today, President Bola Tinubu's economic revitalization is a bold bet on Nigeria's future. His 8-point priority areas led by economic reform are driving 3.76% of GDP growth and 9.1 trillion naira in revenue. Inflation rates are coming down. For Nigerians, the best is yet to come.